Hello everyone and welcome to Fun with Fitzy and Sharma. Today's video is going to be on HST, otherwise known as Harmonized Sales Tax.
The GST, the Goods and Services Tax, was introduced by the federal government on January 1st, 1991, and then it was replaced by the federal sales tax. The Goods and Services Tax was used on the sale of most goods and services, and the seller of the goods or services was responsible for charging the tax, collecting it, and remitting it as well. On July 1st, 2010, Ontario combined the PST with the GST, the Provincial Sales Tax, and the Goods and Services Tax to form HST.
Any business with the sale of taxable goods and services of more than $30,000 per year is required to complete a registration form and send it to Canada Revenue Agency. Now, each company as a registrant is assigned a special and is called an HST number.
Okay, so HST is known as a value-added tax, and it is designed so that the government receives its money at each stage of the production and distribution cycle as a value that is added to the product. We just want you guys now to actually pause the video and work your way through with the chart below. It's very easy to follow. HST is 13%, so you should have your calculator out, and you're going to be multiplying different values as you go through the example with decimal 13 point. And at the very bottom of this chart, you're going to see that the total remittance of $52 is the total amount that is charged for the final product, and it is paid for by the consumer. And that'll make more sense later on. Next, ultimately, only the final user, as we said before, pays for it.
Okay, so there are two aspects of HST. So we're going to go through sales and HST. HST is added to the customer's invoice and collected from the customer, and then it is remitted to the government. Remitted is just a word that we use to explain that the company is giving the money to the government. Also, with a few exceptions, HST covers the sale of all goods, not just those sold by retailers to consumers. It also covers all services. So if you get your haircut, you have to pay HST on that.
Next, the second aspect here is the purchases in HST. So all businesses are entitled to recover the HST that they are charged by their. They must pay the HST to their suppliers, but they can recover this tax from the government later on.
So here now we're going to look at the accounting for HST. How do we journalize the transactions as a company selling or purchasing? Okay, so there are two HST accounts, as we just discussed in the previous slide. The first one we're going to discuss is called HST payable. In the HST payable account, this accumulates all of the HST that you have collected from your customers or you've charged to the customers during this particular reporting period. HST recoverable, on the other hand, this accumulates all of the HST that you paid or your company paid during the reporting period. So any purchases you made for supplies or equipment, you will have paid tax on that. You need to record that tax you paid there in the recoverable account. Both of these accounts appear in the liabilities section of your balance sheet, okay, or in your ledger. When you have a account that is a liability that is in the that has a debit balance, so I should go take a step back here. HST payable has a normal credit balance because it is a liability, and this is a contra liability. We're going to talk about this here. Contra liability. Now you're going to see a lot more contra accounts in this course as we go through it, but basically this has a debit balance. As we talked about, accounts receivable has a debit balance. Well, a liability that has a debit balance is called a contra liability. Okay, so these two accounts go right beside each other in the liability section, and the HST recoverable is subtracted or deducted here from the HST payable account, and this helps you determine the net HST to be remitted to the government. And remember, remitted is just a fancy word for saying we owe the government or we're paying them.
Okay, so HST in the books of the seller. In your textbook, you're going to see GST and PST. Ignore those terms and just use HST. And currently HST is at 13%, so that's the value we're going to look at when we're doing the next couple of slides. So here we have a source document, and we are going to journalize this. So we have accounts receivable M&R Publishing of $1,695. Let's just ignore the dollar value right now. You provided them a sales of $1,500, and that's indicated there for cleaning and maintenance services. So on your calculator, you type in $1,500 and you multiply that by 0.13. And when you do that, you're going to get a value of $195. That indicates your HST payable. So again, you provided a sale, you collected HST. It's the HST payable because you owe it back to the government. It's a liability. And to calculate that debit value, you just remember debits always have to equal credits. So 1,500 plus 195 gives you the $1,695.
Okay, so now look at that in the books of the purchasing company. Here we have the supply house is the seller, and the purchaser now is custodial services. So we're going to do the journal entry here in this for this company. Okay, so again, here they have purchased printing paper. You can see on this source document. So we bought computer printing paper, which we will call supplies, and you know supplies is an asset, and when an asset goes up, you debit it. So there we have $600 worth of supplies, and we're going to debit supplies here for $600. Now, as you recall, when you buy something, you have to add the tax to it, and as Ms. Sharma said earlier, we're going to ignore the PST and GST because these are old sales slips, and we're going to multiply the $600 times the 0.13 HST, and it's going to give us $78. So we have to add $78 to this purchase, and you're going to put that down here as an HST recoverable, because remember, when you purchase something, you can recover that HST back from the government, which means you get it back. So we're going to accumulate it in the HST recoverable account. Okay, so we have two debits here, our supplies and our HST recoverable, and we, as you know, because it's a purchase invoice, no money has exchanged hands here, and so now it's going to be an accounts payable. And we, as the custodial services, owe the supply house the 600 plus the 78 to get the 678. Remember, your debits must always equal your credits.
Okay, now looking at remitting your HST. You can see that the total GST or HST that was in the payable account was $2,309.65 is given to you right there. So if we want to close out that liability account, you'd have to close it out with a debit. So HST payable is debited for that amount. If you think about your T accounts, you will now have a nil balance. Now, you're going to look at your HST recoverable. Looking back at the document, you can see that HST recoverable for the company is $1,567.90. And again, you're closing that out, so it's going to be a credit. Now, looking at the values, your HST payable was greater than your HST recoverable, which means you still owe money to the government. So you subtract those two amounts, you get your difference, which is $741.75. Students sometimes get confused now. Do I debit bank or do I credit bank? In this case, we owe money to the government, so your bank will be credited because your bank amount is decreasing, and you decrease bank with a credit.
Ms. Sharma, what would happen if it was the other way around and HST recoverable is bigger than HST payable?
Okay, so in that case, the first two lines of your journal entry would be the same. You'd have an HST payable for the same amount, or an HST recoverable for whatever amount, the amounts. But instead of crediting bank, you would debit bank because the government owes you money, which would naturally increase the amount of money you have in your bank account. And again, debits would equal credits.
Okay, so now let's take a look at the balance sheet. And this is just a partial balance sheet. So far, we just have the liabilities here. And as we mentioned earlier, HST payable and recoverable go on the exact same, in the same section. So accounts payable we have here of $5,634.90. And you're going to see, remember we do, when you need to do some subtotaling, move it to the left. Well, in this particular company's case, there was $2,309.65 in HST payable, and the account HST recoverable had $15,067.90, like we just discussed. So you're going to subtotal it, or subtract actually in this case, sorry, and put your answer over here on the right hand side. And that number here, $741.75, is a really important number.
If you are the seller, first you have to calculate the sales tax, the HST, and add it to the price of the goods or services. Number 2, you have to collect the tax from the customer. Number 3, you have to accumulate the HST in a special liability account called HST payable, because you have to pay that back to the government. Number 4, you have to remit the accumulated HST to the government periodically. In the accounts of the buyer, HST is paid and is recorded in a contra liability account called HST recoverable. It has a debit balance. And here at the bottom right hand side, you do not need to write this down, but it's important to know HST recoverable is deducted from HST payable to see how much the business is going to remit to the government, and we looked at that already.
Okay, again, back on the seller side of things, HST payable is a liability account, which means it has a normal credit balance. So you would credit HST payable when a sale is made. And here's an example. So if you make a sale, let's say you're a service business and you cut hair, you would have revenue credited. Let's assume this is $100, so your revenue would be $100. And then once you add the tax on, it's going to be $13, and therefore, as a seller, you need to collect the whole entire $113 from the customer, but you only keep 100 of it. Now, if you make a sale on an account, it's the exact same thing, only instead of using bank, you're going to use accounts receivable. So again, it's 113, even though you have to collect the full 113 at a future date from the customer, you only do get to keep 100 of that. This $13 you have to give to the government. On the buyer side of the books, HST recoverable is a contra liability. Contra accounts we're going to learn more about again, we talked about, so this has a normal debit balance. Okay, so you would debit the HST recoverable when a purchase is made. And for example here, let's say you purchased supplies. I'm just going to write supplies in brackets here. And again, let's use 100s because it's easy. So let's say your supplies were $100. Again, you need to pay the tax at the time. So you're going to add $13 on, and your bank has just gone down $113. Same thing on accounts. The only thing is you would owe the money at a later date.
Okay, now remittance of HST. HST recoverable is deducted from HST payable to see how much the business is going to remit to the government. A common HST remittance would look something like this. You would have your HST payable, and you would debit HST payable for the entire amount that is sitting in your HST payable T account or account, and you would credit HST recoverable. The difference of the two, because most likely your company will have to pay more to the government than they can remit, would be the bank amount, and that's how much your company would be sending to the government in the form of a check. If your HST recoverable is greater than your HST payable, as previously discussed, instead of crediting bank, you would be debiting it for the difference.
Okay, so that brings us to the end. By now, you should be able to explain what HST is and when it came into effect. You should be able to journalize transactions incorporating HST from both perspectives, the perspectives of the buyer and the seller. You should be able to calculate refunds and remittances and do the journal entry for that. And reminder, in the last video we talked about a Chapter 6 review sheet on source documents and HST in our online environment. Remember that you can go in there and there's some information on HST in there for you. We hope this video helped, and thanks so much for watching.